All right, we're gonna start off our September 2 game plan for the week. And we're gonna start off again. This is the same quote as last week, but the quote of the week is "Too much money ain't enough money" by Warren Money Buffett. So we're gonna go over our pre-market prep here. So the pre-markets with the price range. So we're gonna be cautious of under $1 penny stocks. Only about 10% of under one gappers last week produced momentum. So this has been true for probably the past 3 weeks. Tickers under $1 have been pretty fucking weak. So we're gonna try and avoid those. Stocks ranging from 1 to 3 had a 50-50 chance of having momentum. There's no clear edge in this area. However, this is where most of the momentum came from, so we're going to stick to this area. Only 3 stocks opened over $3 last week. About 2 weeks ago, or 2 or 3 weeks ago, there were a bunch of tickers over $3, over $5. That has cooled down a little bit, so when it comes to tickers over $5, we're going to just kind of back off a little bit and focus more on the $1 to $3 range, unless that changes on Monday. Some changes from last week. So under the $1 chances of having momentum, they're about the same. 1 to 3 are the same. And again, the biggest thing for me is we only had three tickers over 3. So again, what I just said earlier. Day one stock stats, so we're looking at the price action now. So stocks fading in pre-market had a 100% chance of being bust. Obviously, that won't be the case this week coming up most likely, but this number tends to be super high and has been for the past 3 weeks. So, and then also stocks flat to open had a 57% chance of being bullish. This number is typically around 50% the past 3 weeks, so at least this data has been pretty consistent. We can see here that last or 2 weeks ago, there were 3 stocks that were fading into open that actually had momentum, where this week there was 0. But 2 weeks ago, there was also 20 tickers that were fading, and this week there was only 10. So there just weren't as many tickers, I feel like. And then flat into open, we had a bump from 39% to 57%. So again, we want to look at ones that are flat into open and kind of continue with that trend. Putting it all together, so if we want to put both together, price range and price action, what we're looking for on Monday are stocks from $1 to $3 that are opening with high volume and pushing into open. Stocks over $3 are kind of neutral on, and stocks under $1 that are also fading into open, we also just want to stay clear of for the most part. Don't waste too much capital. Here are our bullish ticker review. So we're going to look at time, and most stocks run before 10 a.m. So we want to kind of throw out some money early on. That's where kind of the best chances are. 64% of the stocks at high day before 10:30, aka once 10:30 hits for me, I'm pretty much packing my bags. 85% of bullish moves are under 45 minutes. So not that we really look at that, but it's just something in our head to look at the time and say, this bullish move has lasted this long. How much more juice does it have in it? So, and price, average bullish move this last week was 50%. So if we are holding some lotto shares for the moon, if the stock gets to around 50%, start cutting away. Here is the changes from 2 weeks ago. So most stocks run before 10 a.m. 85% this past week compared to 78%. That's about the same. 64% of stocks at high day before 10:30 compared to 57% 2 weeks ago. So we're seeing more stuff happen earlier in general. 85% of bullish moves under 45 minutes. That was 64% 2 weeks ago. So for me, all these 3 stats are telling me that things are quicker. We have to be in and out faster, especially in the morning. And then the average bullish move was 50%. So it's pretty much the same there as well. Pattern rec, we're going to go through kind of the top pattern recognitions we saw. I don't know why I had that in there. Don't think that is the right one. No, that's not the right one. So for the bullish ones, we have the inside 5 flag. This one was a common theme the past couple of weeks as well. We have the double bottom flag. VWAP reclaim, hard to predict, but we want to look for the flag right below VWAP with an uptrend, after an uptrend. Open bell bears, consolidation and go. This was the pattern the past 2 days, the end of last week. We saw this whole type pattern in general. This whole patterns we saw a bunch of at the end of the week. So going to maybe look to see if it does it to start this next week, but if not, oh well, don't really give a shit. We have the downtrend, uptrend hold. So when we have stuff kind of consolidating, we want to proactively get this uptrend going as quick as possible. That way, if it does come down, we don't have to think about it. We just add into it. Some bearish patterns we saw were high day break and all day fade. The faster it does this, the faster we can move on. Something to note here too is that we have had this consolidation pattern, so do not just get rid of it or look away. We want to, if it starts holding and pushing, we can add down here for some quick monies. VWAP breakdown. This one, if you see something like this, just kind of take your foot off the pedal. Key level fails, of course. Double tops, we saw a bunch of. And the keys to winning this week are consistent volume. We want to stay focused and locked in when there are no trades. We never know what to expect, and then also to be patient. And so that is going to be it.